with the big bank executives. Some of them tried to do damage control today, but all of them faced a pretty hostile audience. Members of Congress intent on bashing bankers. It all took a lot of stagecraft for both sides. Tom Foreman joins me right now to break it down for us. Tom.
It was a showdown, Campbell. Even as politicians have fought on the stimulus bill, they have pretty much agreed to beating up highly paid CEOs in the process because they know that is winning stagecraft, and that's what happened today. So at the House Financial Services Committee today, bosses from 8 of the nation's biggest banks, beneficiaries of the bailout, were strapped into the hot seats. These guys are easy targets. Look at these big name banks here and big paychecks. Their combined compensation for 2007 just short of $191 million. 1 year, 8 guys, all that money. So the lawmakers wanted to know why getting a loan remains so tough for average Americans and small businesses.
Start loaning the money that we gave you. Get it on the street. And don't say, oh, well, we're not using that money for bonuses. Come on.
So can you explain why your institutions are finding money to fund a multi-billion-dollar merger that will produce 19,000 job losses?
When the press makes inquiries as to what you did with the first tranche of money that we gave you, many billions of dollars, your answer is it's none of your business.
But basically, you come to us today on your bicycles after buying Girl Scout cookies and helping out Mother Teresa, telling us we're sorry, we didn't mean it, we won't do it again. Trust us. America doesn't trust you anymore.
Of course, these lawmakers know they can just pound away on these guys right now because public sentiment is so hard against them. Nonetheless, the bankers say they get it. They say they are making more loans, more than they would have without the bailout, and they say one of the reasons it's not going so smoothly is because the standards have tightened up as part of the overall effort to get bad loans under control. Those answers, Campbell, as you might guess, not being well received.
But, Tom, we're talking about spending billions more to prop up the economy. For all this tough talk, is anything really changing?
Well, you know, a little bit is changing, Campbell, but only a little bit. The White House, you may recall, is putting pressure on bailed-out companies over the use of corporate jets and all those big paychecks. But this is what drives taxpayers crazy. New York Attorney General Andrew Cuomo today accused Merrill Lynch of issuing $750 million in bonuses early, just before Bank of America took over Merrill with the help of taxpayer money. His suggestion is clear that Merrill execs wanted to take the money and run, leaving taxpayers to pick up the additional shortfall. Listen to him.
How do you pay a CEO a performance bonus when by definition the institution was failing? What did they do to deserve that money?
Bank of America says it urged Merrill not to pay the bonuses this way, and Merrill no longer exists as its own company. So once again, Campbell, frustration for taxpayers and no one taking responsibility for it.
No, apparently not. Tom Foreman for us. Tom, thanks. And this ties in very nicely with cutting through the